would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whiteline. I am the Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. Welcome to the end of the week, everyone. I hope it has been a fantastic week, that you've achieved all your goals, etc., etc. Take a little time to catch your breath over the weekend, maybe review your goals, see where you are, adjust, adapt, improvise, maybe, so that you can get even further towards your goals next week. Hopefully right here on this show, we're at least giving you a little bit of fuel for the fire burning in your head. I hope so. Whether that's just to think about things in a new way or come at things from a new angle. And that is really what today's show is all about. It's an interesting show today. I hope this is one that inspires you to do a little research. In all honesty, this is going to be directed probably a little bit more at folks a little bit further along age-wise. Maybe you're someone who's had a career for a while and you're looking at trying to figure out different ways to use your moolah that you've accumulated in your IRA. We've talked about this before. I had a listener who wanted to find out if being 60 was too old to get involved in real estate investing, and I told them no, absolutely not. And we went down some reasons why that was absolutely the truth. But something I was absolutely completely unaware of. I feel like I should have been able to say, I totally know about this, but I didn't. It was an article that got to me from the Wall Street Journal, and it inspired me to do a little bit more research. I don't know if this will take up the whole show. I've got several stories queued up, but this one's awesome. It is a great way to look at your situation from a different angle and potentially find access to assets that you previously thought you couldn't touch until you were at least 59 and a half. So we're going to talk about that because it's kind of awesome. I really only have one provider of this particular service I'm going to talk about, not because they're giving me money, because they're not, but simply because that's who got mentioned in the Wall Street Journal article. I would strongly suggest doing your due diligence on other providers. I plan to. I'm probably gonna spend some time this weekend researching this just a little bit more. But I really wanted to. Like I said, I had other things queued up for today, but this is an article I came across today, and I just thought, man, I really would like to not only look at this myself, but share it with you as soon as I knew about it, because you may want to spend a little bit of your weekend checking this one out. So we'll discuss it. Before we jump in, though, let me get the usual housekeeping out of the way. The best place to find me is at the website, www.therebelbroker.com. Click the big red button at the top that says Take the Survey to support the show. Use the same email address both times you're asked, answer a handful of questions, and you've not only helped the show grow, but you have also put yourself in a drawing for a $50 Amazon gift card. Now, we give one of these bad boys away every month. We've already given away 5, not 4, 5. So $250 worth of moolah in the hands of listeners who have gone ahead and clicked that red button. So take a minute out of your day. Go ahead and do that. If you ask, well, why, Robert? Why must I do that? It's a demographics thing. I've always tried to be perfectly upfront with everything relating to the show, and it's a thing that allows folks who might want to advertise on my show get some demographic understanding of folks who are listening. It's no big invasive questions are involved here, but you're absolutely helping the show out. And I just want to make sure everyone's aware of what the deal is. I think there's actually a little disclaimer in there somewhere when you're doing it that tells you that as well. But in any event, of course, while you're there, you can also reach out to me, share any ideas, observations, suggestions, or questions that you might have. Just go to the menu bar and it says contact. It's not a trick, I promise. Click contact and you'll come to a form and you can send me a message and we can chat back and forth. And I also wanted to thank this was just really considerate. Anytime I start thinking what a good audience I have, something comes up that reminds me what a great audience I have. I don't have the permission to share the full information about this individual, and I'm sure he'd prefer I not do it. But it was just a great thank you card from one of the winners of the Greenberger book, Risk Game. Fantastic book. I loved it. Had a great read, and we did an interview with Mr. Greenberger that came out. Did I release that in December or was it January? I can't remember. But if you go and you do a search on Greenberger at the website, therebelbroker.com, you'll be able to find it. First interview I've done in a really, really long time, and I thought it went really well. I thought it was very revealing, and his book is really a great way to explore mindset, right? Where your mind needs to be in order to get into a good space for you to push forward with your investments. But anyway, Jason from Detroit sent me a great note thanking me for the book, saying how much he's enjoying it, and heaping on a little praise for the show. Thank you, Jason. I am so glad I was able to put that in your hands. Hopefully it's the first of many good things that we'll be able to put in your hands through the show. So thank you very much for that card. I wanted to mention that. It's very rare that I ever get a piece of paper with ink on it from someone, which is great. Emails I get plenty of, but I tell you, real mail, very much of a surprise, very much appreciated. I want to make sure Jason knew that. Okay. There was one other little tidbit. Yesterday at the end of the show, I ended with how cash investments had jumped 18.3% in January. And we kind of discussed some numbers about it and got some quotes about it. And after I finished the show, posted the show, and everything was done, I realized, I didn't make my main point as to why I was even sharing that information. So, in reference to that from yesterday, the reason why I thought it was odd that we saw an 18.3% increase in January, I would imagine some people would interpret that as a lot of investor confidence in the marketplace. And I'm not so sure that's true. I think another way to look at that is that there are investors who don't have a lot of faith in other investment vehicles, so they're migrating money over to real estate. And I think that's one of unless people really think that in some of these marketplaces that are at ridiculous highs, that they're just going to continue to go. I suppose that's possible, but I wouldn't expect an 18.3% jump with that kind of mindset. Maybe a 5% jump, but I wouldn't expect 18. So it has me sort of looking around and scanning other investment options. We've got the stock market that's at all-time highs. I can't help but wonder if folks are thinking to themselves, I should pull my money out of that since it's at this all-time high and put it into this thing that's a real thing, that's a piece of real estate. So I wanted to end it with that yesterday, and for whatever reason, I don't know what happened, what possessed me, but I didn't get that far. So hopefully that's a nice little nugget of information to roll around in your head, see where it takes you. I just thought it was very interesting, and I don't think it tells us what the headlines want it to tell us, that the investment market, the all-cash market still is what we imagine it to be. I just don't see it as the all cash investor coming in and buying it as a true investment in the classical flip or rent scenario. It just seems to me like someone potentially moving money from one investment to another, someone who's not necessarily a real estate person, but likes the idea of buying a thing, a physical object that's going to be in demand. So see how that works for you. See if it makes any sense. Okay, so as I mentioned, we had an article from the Wall Street Journal, and as most of you probably know, the Wall Street Journal has a paywall. So if you wanted to go check out this article, if you're already a subscriber to the Wall Street Journal, I'm not sure if they give you like a 1 or 2 articles for free thing where you can go and look at them without paying. I'll include the link so you can check this out yourself, but I'll also include a link to the company they're talking about in this article. Because I think this is kind of an interesting way to go in terms of someone looking for more options, more things that they could have in their toolbox to potentially facilitate getting a real estate deal going. So who would be the number one folks to benefit from what we're about to talk about? Let's say you've worked in some industry for some period of time. You have an IRA that's got a nice good chunk of money in it. Maybe it's got enough money in it that you could use that money to purchase real estate if you could get access to it. But there's all kinds of problems related to that. First, if you're under 59 and a half, there's a 10% penalty right off the top. Then, of course, there's paying the taxes on it immediately. So by the time you're done, you're probably losing 40% of what's in there. So how could you make use of that without suffering all those negatives right off the bat? Well, there's a thing. It's a self-directed individual retirement account that you can then fund with your IRA money, and then purchase homes with it. Lots of rules and risks. This is not for the faint of heart. Do not do this because I suggested you do it. This is simply me putting a seed in your brain for you to nurture in any way you see fit. You can disregard it and say, that's nuts. I refuse to take that level of risk with my IRA funds, and that's perfectly respectable. You will lose no honor in my eyes if you choose not to go down this route. But I'll tell you what, I'm going to do a little more research because this sounds particularly awesome to me because I would love to do this. So let's sort of run down the list here in terms of what the folks at the Wall Street Journal have to say about it. Self-directed individual retirement accounts allow people to diversify their investments into assets other than the traditional stocks, bonds, and mutual funds that make up most retirement plans. Examples of alternative investments include real estate, precious metal, oil, gas holdings. The catch: the IRS requires a qualified trustee or custodian to administer the assets, such as handling transactions and managing paperwork and reports. So far, only about 24 companies in the U.S. can act as custodians of self-directed IRAs. So they are out there, right? They exist. 24 of them. One they cover here is called Advanta IRA. And that's a self-directed retirement plan that's located in Florida. And they oversee about $820 million in assets. Quote, according to Scott Moorer, Director of Business Development for Advanta IRA, quote, a lot of our clients are already real estate investors, so their IRA is simply a new source of capital. And for others, they don't like being at the whim of the stock market. So in order for this to get going, you go with this company that's going to do your self-directed IRA. You open an account, fund it by transferring cash from an existing IRA, and then identify the property that you want to purchase. According to this, single-family homes are the most common that's going to get rented out. They purchase the property on behalf of you, the investor, via your IRA. Now, in this case, according to what the report is from the Wall Street Journal, nearly all the transactions are all-cash deals. But we'll talk about that in a minute because this kind of implies that mortgages don't play a part. And they do comment that they bypass a mortgage lender by going with all-cash deals. Well, yes, of course you do. That's the definition of paying all cash. You don't end up with a mortgage lender. The rental income from the property that you've acquired goes to the custodian, in this case, Advanta, and then they pay the bills for the property, the cost for the service, $200 to open the account, and then and purchase the property, and then a flat $295 a year to manage the account. They don't handle property repairs or maintenance, tasks that you're going to have to do yourself or you're going to have handled through a property management company. So far, so good, right? I mean, there's stuff you want to stop and think about. You want to be cautious. Don't want to jump right into this. This is absolutely something you're going to want to know more about. I'm intrigued. I'm going to look more into it. According to them, the rules that govern real estate IRAs are anything but simple. IRA owners are forbidden from engaging in certain transactions regarding the property, even something as simple as mowing the... Oh, okay, see, I didn't notice this before when I read this the first time. Even something as simple as mowing the lawn of a property you own in an IRA can run afoul of IRS regulations and render the account owner susceptible to losing the IRA's tax-favored status, which could trigger taxes and penalties. That's because IRS rules require contributions to an IRA to be made in cash, not in services. The U.S. Government Accountability Office issued a report on retirement security last month and stated that people who invest their retirement accounts in unconventional assets, such as real estate or virtual currency, may be placing their savings at risk. Now, Bob Starks is a gentleman who has been using purchasing real estate for his IRA since 2009. He says, I do have some stocks and bonds, but 80% of my IRA is in real estate. A commercial real estate agent in Duluth, Georgia, who owns 5 rental houses and a small apartment building. He's also flipped over 20 houses through his IRA. So the reason why I wanted to go that far and mention this individual was he's doing what folks want to do in real estate investment, and with a regularity that's pretty impressive. So we're going to take a quick break here, but when we come back, we're going to actually go to the Advanta site and look at what they have to say on their page, and we'll discover there's a little bit more to this. In fact, that makes it sound a little bit more enticing. So stay tuned. We'll be right back right after this.
Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner-broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909.
Welcome back, everyone. We are covering self-directed IRAs as a tool for your real estate investment. If it makes sense, if the numbers make sense for you and the complexity is something that you can get involved with. One other thing I wouldn't mind mentioning today is I had a contact from a listener who apparently found my show over on Blog Talk Radio. Now it's been how long has it been? A couple of years, year and a half since I did my show on Blog Talk Radio. And when I did the show on Blog Talk Radio, I did it live. Oftentimes as long as 3 hours, usually at least an hour to 2 hours. But it was live. So I would take phone calls, and he was asking whether or not I'd be interested in doing that again. I have no problem taking live phone calls. In fact, the whole reason I went on to Blog Talk and was there for as long as I was because I wanted to take live calls. Now, since then, I've discovered enough technology that I could take live calls now without having to be involved with Blog Talk Radio. It would just have to be a question of finding a time that works for everybody. But I found that I just didn't get that many calls. I think over the course of I don't even remember how long I was on Blog Talk. Was it 2 years or 3 years? I think I had a handful of calls that were serious calls. And then I had a few of the trolling style calls that were usually dealt with pretty quickly, or me making fun of them or however it went. But I thought that was interesting. And one of the questions he asked was, I listened to one of your shows that went on for almost 3 hours, and it had, I guess, like one break in there at a minute and a half. Did you ever have to use the bathroom during any of those things? And the answer is yes. And it just meant that I had to move very quickly while my ads were running. But anyway, I just thought I'd mention that. You can still find them over on Blog Talk Radio if you want to go take a look. It's been a long time, though. Okay, so let's jump in. We are discussing. Now, I don't want you to assume that this is me endorsing Advanta IRA. Now, their website is advantaira.com. I will put a link in the show notes. But the only reason I went to them was because that was the folks that got mentioned by the Wall Street Journal. Keep in mind, according to the Wall Street Journal, there are supposed to be 24 of these companies out there doing it. So it sounds like there's a pretty good selection that you can make. I would absolutely, before doing this, compare these plans to find out if one of them makes more sense for you than the other, if you want to take more direct control. Now, right out of the gate, and this may not apply to everyone. Some of you may be perfectly happy with the way your IRA is working now and with it making money. As someone who has had years over the past decade where my IRA lost money, and someone who I think, speaking of myself, I feel like I understand real estate pretty well. I am extremely confident that I could make choices for my IRA money that would make me a whole lot more money than leaving it in the stock market. And I'm even if I had, and this has not happened in forever, even if I had elements of my IRA that made over 10%. I mean, the once you averaged out everything, because some make more than others, right? Some choices, you usually select different funds for your IRA. I have no question that on a year-to-year basis, I would beat anything that I could invest in terms of just stock-based stuff or treasury-based stuff or any of those kinds of things. But that's me. Remember, I was first licensed in real estate in 1988. Over 25 years, real estate has been a part of my life. Granted, there have been portions of my life where I didn't have it as my full-time job, and I was doing it part-time. There have been times when I was full-time, but real estate's always been there. It's the one true constant in my universe of the last 25 plus years. So I feel like I have some insights. And in addition to that, for all but about 2 or 3 or 4 of those years, it was all based on the market I'm in right now. And even during those times when I wasn't living here in the area, I was still keeping up with the real estate in this area. I was still licensed as a real estate agent. I was still looking up things in the MLS. I was still, even when I lived in the UK, I was still offering people advice on real estate and helping them find the home that they wanted. And then when it came time for them to actually look at properties, I'd refer them to another agent. So I've always kind of had my fingers in. The only time when you could absolutely say I wasn't doing anything at all was when I lived in Florida for a year and a half. Back in the mid 90s. So that would really be it. So, and the reason I'm going through all that baloney with you is that's my comfort level. You need to decide what your comfort level is. If you don't feel that confident, then maybe taking the helm of your IRA, which is supposed to be your retirement, your safety net, maybe that's not the way to go. I want you to really, really think about this and analyze your options before you do it. And talk to an attorney, talk to an accountant. I mean, get some expert feedback on your plans and see what you think makes sense for you. All right, so here I am at the self-directed plans page for Advanta. And a couple of interesting things here are mentioned that aren't mentioned in the article from the Wall Street Journal. Let me just go through it. The Advanta IRA is a self-directed IRA administrator that provides superior customer service and educational tools to assist you in realizing the maximum benefits possible with your IRA. And here's what they can do. This is kind of awesome. Self-directed IRAs can acquire real estate, hold mortgages and notes, private placements such as LLCs and trusts, precious metals, invest in foreign currency, and participate in futures trading and other investment options. These plans can certainly hold their traditional stocks, bonds, and mutual funds, but the myriad of alternative investments are what attract owners of these accounts. So right off the bat, you need to be smart about whether or not you even participate in this self-directed thing at all. But you also need to recognize that it gives you everything a not self-directed IRA would give you, but gives you the flexibility to do tons of other stuff. If you're someone who wants to take any kind of a hands-on interest in what's going on with your IRA, I can't help but think that this would be a good thing. Even if you took it and did this and picked the exact same things that your IRA is currently invested in, it seems to me like you might be better off. You want to look at the numbers. You want to see what the costs are. But I'll tell you, when I looked up my current IRA and what I get charged by these folks, it sure does seem to add up to more than what I understand these folks to charge. So check it out for yourself to make sure. But at first glance, this is well worth more attention. Okay. The term self-directed simply means that the owner of the IRA has control over what investments the IRA makes. By doing so, our IRA owners are taking control of their own retirement futures by investing in what they know and understand. We make no commission. See, that's what I'm talking about. And we do not sell investments. Instead, we offer valuable tools for you to use when making non-traditional investments or traditional investments. You can do either. Advanta IRA offers free seminars and other innovative educational tools created to help you learn and navigate the freedom of self-direction. After all, knowledge is power, but learning to use that knowledge to control your assets is key. All right, so now the thing that caught my eye was that this thing can hold mortgages and notes. Now, that happens to be a link here on this website. So if you go ahead and check that out, it becomes kind of interesting. Today's more stringent lending requirements by traditional institutions are making private lending a lucrative business. Private lending has become a popular investment tool for self-directed IRA owners. Your IRA plays the part a bank normally would and extends loans for mortgages and trust deeds, secured and unsecured notes, as well as judgments and structured settlements. Sophisticated investors are doing just that, making private loans to individuals or entities in an effort to substantially increase the wealth of their retirement accounts through earnings on the interest rates and other repayment terms of these loans. That's kind of cool. Private lending provides a flexible benefit for both the lender and borrower. The private lender, IRA, provides capital to the borrower much faster and with more accommodating terms than traditional lending institutions. The IRA owner chooses the loan recipient, the type and terms of the loan, and also decides whether to provide secured or unsecured loans. Secured loans are backed by collateral to protect from default. Unsecured loans typically are offered at a higher rate of interest in lieu of collateral. Now, that just means that it gives you tons of different options so that you could potentially be a participant. So let's say you're in a position where your IRA has a certain amount of money, but it's not enough. It doesn't get you to where you need to be able to purchase all cash. Now, I'm not seeing on here that it means that you can get a mortgage, that your IRA can get a mortgage, but it does mean you could contribute to the investment process. So let's say you got a partner on a property and you wanted to use your IRA for a portion of it. Who knows? Let's pretend you have $100,000 in your IRA and the property you want to purchase is $200,000. You find a partner with $100,000, so you both go into it using your IRA. And as long as you live up to the rules about what you can and can't do to the property, which means, from what I'm reading, it sounds like you basically can't do anything. The other person who brings in the cash is also going to be responsible for all upkeep, maintenance, and all that kind of wonderful stuff, whatever you agree to. But then you've retained a percentage interest in the property without you legally being even allowed to be involved in contributing to the property or the investment. So you kind of become a silent partner in that property, but it gives you another avenue to get involved. Your IRA may not loan money to disqualified persons, you or your spouse, your parents or grandparents, your children or their spouses, your grandchildren or their spouses, and certain business partners and fiduciaries. So there's going to be ways you're going to have to arrange this. And it may be one of those scenarios where you have simply found someone that looks like a good real estate investment in your local area, and you just serve as the lender, and that is it. And that's the extent of your involvement. But your agreement, your loan, can be for a certain percentage of return on the primary money that's being taken. It could be based, I would imagine, on returns enjoyed on the property itself. So it could give you avenues to boost your capital, whether you're talking about someone who's doing a flip so that you get that money back quicker. It could give you an opportunity to really take advantage of those kinds of deals, particularly if you're someone who's already been poking around in the real estate world. Maybe you are involved in some local investment groups in your area, and you want to try to figure this out for yourself. Now, that's outgoing, right? In case you want to do the mortgage and note thing, you can absolutely do that. The downside is that you can't jump in and purchase properties with, say, 20% down from your IRA and then get funding for the rest, right? That's not going to happen. I didn't see anything that got provided that as an option. But what it does do is opens the door for you. Now, we talk about on this show barriers to entry, right? And we have talked about numerous communities across the country where we were expected to see very aggressive growth in rents, where the property acquisition price was $80,000, $90,000, $100,000. So clearly it's going to depend on what you have in your IRA. If you've got $200,000, $300,000, obviously your options are going to be much more open in terms of finding a community where you can purchase a home that's going to be positive cash flow. Now, as I've said before, all of this needs to be completely vetted. You need to figure out exactly what makes sense for you. But being able to get access to that money, and one of the things I've always been upset about as an investor is, man, I know I could do better with my money than this retirement thing is doing. And and out of whatever you want to call it, laziness or anything else, I have frequently called my person who's taking care of my IRA. And of course, when I ask, is there a way for me to make use of this IRA money without paying penalties? Can I loan myself the money and then pay the IRA back? And I guess there used to be things like that. I remember when I was in my 20s, when I first started my IRA, there was a thing I could invest in. I was doing real estate full time. I was contributing to an IRA, and I just wanted to be able to dip into it and then repay it because there were some deals I wanted to try and do with some other folks. And there was one, that's for some period of time there was a way to do that, and then that went away. I've talked to 2 or 3 different IRA folks, and there's no way to do that, at least apparently right now, for me. And this would be a great way to put my money where my mouth is and get access to this cash and make things happen and see where things go. So I'm going to suggest that you take a look at this. I'm going to include the link to this page. Don't just stick with these. As I said, this is something that deserves lots of your attention. So take the time to visit AdvanceIRA.com. Check out their self-directed plan. And if you're someone who's in your late 30s or your 40s and you've been working a job where you've been accumulating money in a 401k, this may be an amazing way for you to get hold of those funds and be able to control what they're invested in. And again, if it fits your skill set and you're confident that you can make more than the whatever percent that these have been making for you recently, I think my last one, God, I've seen ones where I was negative. I've seen ones where I was at 3%, 5%. I think I had one great year where I made 12% on something. But in any event, it's an option, right? And there's nothing better than more tools in the toolbox. And if anything, if you have come away from this show feeling this is some valuable information, I cannot help but hope that the time that you spent listening was well invested and you're feeling like you got a payback for that. So hopefully that's the truth for you. Definitely check this out. Thanks again for listening, everybody, and I'll talk to you all next time.